G'day folks, Jim here from FX Charts, Friday the 17th of January. Thanks for dropping by. Well, the dollar was fairly mixed today. It's a little bit soft at the end of the New York session. It was a fairly choppy day, but didn't really go anywhere fast, and most of the levels are fairly close to where we left them yesterday. In Europe, the CPI came out pretty much in line with expectations. And the same in the States. 1.5% was the year-on-year return for the CPI. That was slightly more than expectations, but not really too far out of line. The continuing jobless claims, they were slightly worse than expectations, while the Philly Fed manufacturing survey was higher than expected. So it meant that the dollar was a little bit choppy, but as I say, it didn't really end up going anywhere too fast. So we're going to have a look at the charts. And as we can see, this rising trend line that we've been talking about over the last couple of days on the 4-hour charts, it's still holding on to that. It keeps on testing the downside, but it can't really make a break. We'll go to the dailies, and you can see here it's still sitting above it, so it's clinging on. Now the daily indicators are actually pretty flat, so maybe we're going to continue to do much the same. If we look at the 100-day moving average, today we got down to 135.80. The 100-day moving average down here about 135.5. Now it's quite interesting. It does keep on testing it, but it actually hasn't been below it. We had a test back here in around August, but it hasn't actually been below it since last July. So if and when we do go below, I would expect to see quite a sharp move down. But until then, it's really it looks like it could hold on to it, and maybe we do see a little bit of a squeeze higher. But I don't think we're going anywhere too far. We got up to, let's actually go back and have a look at the 1-hour chart. So we got up to the 100-hour moving average today, and that rejected fairly quickly. So that's going to be the first resistance, really, 136.40. If we go, it got up to 136.49 today. If we do go above 136.5, then I guess we're probably headed back up to around this 136 and 3/4 area, and above there we've got 137. So I'm really looking for another fairly range-bound session. The hourlies are not really showing us an awful lot, and the 4-hour charts equally, they're fairly inconclusive as well. So, but watch this support line, a break of that, and then, as I say, the 100-day moving average could see us back down around here to the low 135.20 area, and below there there's going to be support here at the 61.8%. If we do break below that, then we could see a bit of an acceleration towards the downside to 134.5. It looks to me, though, at the moment, as that's some way off. Dollar yen kind of did as we thought yesterday, topped out just ahead of 105. I didn't really think it was going above 105 yesterday. Came back down. It's been down to 104.15, and it's sort of sitting at the lower end of the range. Now the hourly charts are pointing a little bit lower. The 4 hourlies much the same, really, and the dailies, as I've said on previous days, they're heading lower as well. But there does seem to be good support down at also 104.15, 104 the figure level. If we break below that, then we could be headed back down here to this 103.5. I don't think we're going there today, though. There's not an awful lot out. I think we've got Japanese industrial production out, but that's about it. And I would expect probably a fairly range-bound session. Sterling's been heavy since the release of the UK CPI the other day, and the market's kind of reassessing their previous view that maybe the Bank of England might have to raise rates earlier than previously been expected. But it's just chopping around here between this 163.15 area and 163.80 on the top side. The short-term indicators are pointing slightly higher, so we might get a bit of a squeeze to the top side, but I think 163.80 probably covers it. The 4-hour charts I possibly suggested we've got a little bit more downside space, but we're holding on to this support here, 163.15. Now, if we go through this 38.2% FIBO support, then we might head back down towards sort of 162.5, 162. There's going to be good bids if we look at the if we look further out on the dailies. This is the top of the previous channel, so 162.70. It will be the first support, and if we do break below there, then we're heading back down to sort of 160, 180. There'll be some supported around this sort of 162.5 area. So I think on the day though, we probably just range bound. I don't think the euro is going to do much. There's not an awful lot out of this. Actually, I beg your pardon, there's the retail sales out of the UK today, so that might provide some volatility. But at the end of the day, I think probably 163 to 164 is largely going to cover it. Dollar Swiss, well, that's headed a little bit lower in line with the slightly softer dollar going into the New York close. But we're heading. We did see a quick squeeze down to 90.30. It's bounced from there to 90 and 3/4. And I think really for the day, 90.30 to 90.80 probably covers it. The 1 hour charts are showing there could be a bit more down, so we might go down and test this trend line back down around here, as I say, at 90.30. The 4 hour charts, they're also showing it's a potential for some mild weakness, while the daily charts really aren't. They're not suggesting that we're going too much lower. So I think, and I like the idea that we kind of buy dollars on dips for a resumption next week of the uptrend. But today 91 looks to cover it quite easily, and I don't think we're going much above sort of the 91.5 area that we previously saw. The Aussie, well, that took a complete shellacking after the jobs numbers yesterday. Fell into a black hole, and actually it fell right onto our long-term head and shoulders projection at 87.75. 87.76 was the low. So pretty happy about that, and it's since bounced from there. And it currently looks to me as though there's a small reverse head and shoulders taking place here, which might take us up to 88.50 on the day. But there's going to be plenty of sellers up there. If we were to break above that, then I guess we head back up towards 89. But that's a bit of a tough ask, I think, for the coming session. Further out, as I said, the Aussies it's met its first objective at 87.75. There's further bids down here at 87.70 and 86.30, which I'll show you as we get there. They are further out. We have to go to the weeklies really to look at those. Now, personally, I don't think I'd be short for the time being just here. The jobs data, of course, might induce another rate cut from the RBA. They might be forced into doing that. Although on the other side of the coin, they'll be worried about what happens to real estate prices. So I see there's a couple of banks calling for a March cut, but I think I'd be a little bit surprised if that were to happen. We're right at the bottom end of the channel here, though. And as I say, we've hit this support. This here is the August 2010 low, and beyond that we go back to this low here, which is the July 2010 low. That's at 86.30. So I don't think we're going that low yet. I'd be quite surprised to see us much above 87, much below 87.30 in the next couple of days. And on a short-term punt, I actually think we might go a little bit higher. There's on the weekly charts too. Just bear in mind that we've got some bullish divergence here in the Aussie. So I think this down move is everyone's getting very bearish now. It's down here, but I suspect that's probably largely more or less done. I don't discount that in the months ahead we can head lower, possibly a fair bit lower. But just for the time being, I'd be a little bit circumspect. I'm not sure I'd be too short down here right now. As I say, on the day, we could get a squeeze back up to sort of 88.5. And if we go back up there, beyond there, 88, 80, 88, 90 could come into focus. I'm not really sure that we're ready for that yet, though. The Kiwi, where are we, the Kiwi? Well, that's held its own really pretty well. It did get down to 83. It was dragged down by the Aussie. But the Aussie-Kiwi crosses continually being sold, and we're in sight now of the 2005 low, which is at 104.28. We're actually, where's the cross at the moment? It's at 105.60. So it's taken out the 2006 low, but it's holding on above 105. As far as the Kiwi against the dollar is concerned, the hourlies are still looking reasonably positive. We're hanging around this 83.5 level. As I say, we did get down to 83, the figure, at 82.97, I think was the low. But realistically, I think if we saw it back up here to around this sort of 83, 60, 70 level, I'd be quite surprised on the day. It might head up there. I don't think we're heading back above 83.80 on the day, though. The 4-hour charts do suggest that we're probably just going to consolidate around current levels, and because there's not an awful lot out today, I don't think there's any real reason to drive the Kiwi too far in either direction. The dailies, though, they're still looking reasonably positive, and although I think this 84.28 spike top earlier in the week might well hold it for the next few days, it does appear that we could actually head back towards 84. And over the period of time, we may actually end up taking this out and going up here towards 84.80. I think that's some way off. The Kiwi's being dragged around by what's happening in the Aussie, and it looks to me as though Aussie Kiwi can head back down towards 104.25. Below there, if we do head there, well, I think the Kiwis might be getting the champagne out and looking for a parody party. But that remains to be seen. And on the day, as I say, I think sitting here currently at 80, at this 83.5 level, I'd be looking for 83.20 to 83.80 to cover it. So that's about it today. There's a little bit of data out later on. We've got the what have we got? The Michigan Consumer Confidence number. We've also got US housing data and the industrial production. So that we might see a bit of knocking around later in the session, but ultimately I don't think we're going anywhere too directional today. So keep stops tight into the end of the week, and have a good day's trading, and we'll talk to you on Monday. Cheers. Have a good weekend.